Welcome to the Deep Dive. We're the show that takes a whole stack of information, finds those crucial nuggets, and helps you get informed fast.
That's the goal. Quick insights on complex topics.
Exactly. And today, we're really diving into Tesla. It's at this, well, fascinating crossroads, wouldn't you say?
Absolutely. You've got this huge anticipation for a new venture on one side.
Right.
And then on the other, some pretty serious challenges in its main business.
So our mission today is to unpack all that. Look at the recent news, what sources say investors are really looking at, and what it means for where Tesla's headed.
And it does present that paradox you mentioned.
It really does.
Yeah.
How could a company be facing negative headlines, things about current performance, but then you see the stock price climbing? It's confusing.
It is. But I think the key is understanding there are sort of two different stories playing out. One about the future, one about right now.
Okay, let's unpack that. What's the big future thing driving all this optimism, despite the current issues?
Well, the really big news, the thing grabbing headlines, is coming out of Austin, Texas.
Okay.
Tesla just hit a major milestone. They've launched their first self-driving robotaxis for paying customers.
Wow. Paying customers already.
Yeah. I mean, it's early days, kind of a soft launch, you could say. But Elon Musk first started talking about this way back in 2016.
2016. So this has been a long time coming.
A very long time. So this launch, even if small scale for now, feels like a really concrete step towards that big vision of a fully autonomous fleet.
And that's what investors are betting on.
Yeah.
This idea that a robotaxi fleet could just be this enormous new business, enough to justify that monster valuation we hear about.
That's precisely the idea. It ties into the bigger picture. And this focus is so strong. Barclays analyst Dan Levy put it really well.
What did he say?
He basically said the Tesla narrative has just shifted. It's increasingly turned to AV, autonomous vehicles, and robotaxi. And that investors are probably way more focused on I think it was a planned June 22nd robotaxi launch event, and just how Tesla scales up AV more than Q2 deliveries or the fundamental numbers.
But they're almost ignoring the present.
Well, Levy himself, for example, he only modeled for about 375,000 EV deliveries in Q2. That kind of signals, less weight on those core business figures right now.
Okay, so that's the future dream. But let's talk about the here and now, the core EV business. How's that actually looking? They're announcing Q2 deliveries soon, right? First week of July.
Yeah, that's coming up. And it follows, a really tough first quarter.
How tough?
Deliveries were around 337,000. That was their lowest quarterly number in over 2 years.
Oof. Okay, so what's causing these headwinds? Why are sales struggling? Is it just the market?
Our sources point to a couple of things. One is some investor concern about Elon Musk's political ties.
You mean his connection with President Trump and that DOGE role he had? Department of Government Efficiency?
Exactly. The thinking is that might have turned off some potential Tesla buyers. Although, it's important to note, Musk did step down from DOGE, said he needed to refocus on his businesses.
Okay, so politics is one angle. What else?
Well, maybe more fundamentally, the actual sales data isn't great. Monthly numbers from Europe, for instance, showed Tesla sales kind of faltered again in April.
Whereabouts?
Places like the UK, Netherlands, Denmark, Portugal, Sweden, France. Quite a few key markets.
In China. That's always huge for Tesla.
Yeah, and the data suggests struggles there, too, in Q2. A big part of it seems to be the competition heating up.
Like BYD.
Exactly like BYD. Our sources really highlight this. BYD's EVs are cheaper, first off, and their newest tech. It can apparently charge faster than Tesla's.
That's a problem.
It suggests that these competitive issues, price and tech, might actually be a bigger long-term challenge for Tesla than the brand or political stuff, which might fade.
That makes sense. It points to maybe a more fundamental market shift.
Would be.
So, given all this, the weak Q1, the competition, the politics, what are Wall Street analysts expecting for these Q2 delivery numbers?
It's pretty divergent, actually. The consensus is modeling for about 400,000 deliveries in Q2.
Which is better than Q1, but still down year over year, right?
Yeah, still about a 10% decline compared to last year. But then, like we said, you've got analysts like Levy who kind of suggest investors might not even care that much if they miss that number.
Because they're focused on robotaxis.
Right. But then you have the other extreme. Some analysts are very concerned.
Like who?
Wells Fargo analyst Colin Langan, he put out a note in early June suggesting Tesla's Q2 deliveries were actually down 21% year over year based on the the quarter-to-date data.
21%.
Yeah. And Langen has a sell rating on the stock. His price target implies like more than a 60% downside.
Okay, so you've got some saying don't worry about deliveries and others saying sell. Huge downside risk.
Exactly. It highlights how Tesla has become this real battleground stock. You have the super negative bears like Langen, and then still very bullish analysts like Dan Ives at Wedbush.
How do investors even make sense of that? Such opposite takes. What's the core disagreement?
It really boils down to what you believe drives the value. The bulls, like Ives, they see the current delivery stuff as, short-term noise.
Okay.
They're focused on the massive potential of autonomy, robots, future tech. Tesla as a tech company, basically, not just cars.
The bears.
They're looking at the traditional car company metrics, delivery numbers, market share, margins, and they see warning signs in the core business. They think that health is essential, and the future stuff, while exciting, is still, speculative.
Which brings us right back to that paradox we started with. All these negative headlines, these warnings about Q2 deliveries, yet the stock, as of late June, was up nearly 24% for the quarter.
Yeah, it's pretty remarkable.
So is the reason for that resilience truly just what Levy said, that investors are looking past today?
It really seems to be the main driver, according to our sources. Most shareholders seem focused on the future stuff, robotaxis, Optimus robots, not the current delivery numbers. It's like they're investing in a sci-fi movie plot sometimes.
But, okay, let's play this out. What if Tesla does miss badly on deliveries?
Yeah.
What's the deeper problem that might reveal? Something beyond just politics.
Well, if the numbers are really low, the sources suggest it could point to a real problem in that core EV business.
Like what?
Like maybe global EV demand is slowing down more than expected. Or maybe Tesla's products are genuinely losing their edge against these newer, maybe cheaper, maybe faster charging competitors.
So not just a blip, but something fundamental.
Potentially, yes. It could force a harder look at their basic EV strategy. Is it still working as well as it used to?
And what does that mean for you, the investor, then? If the stock doesn't immediately crash on bad delivery news, what's the risk?
Well, the risk is that investors become, as one source put it, heavily dependent on the success of things like the Robotaxi fleet, and really reliant on the Optimus robot business scaling up super fast. And when you look at Tesla trading at, 168 times forward earnings?
Whoa.
Yeah, that's valuing the company based on massive future profit growth. So that bet on robotaxis and robots working out perfectly, it just gets riskier and riskier. It's a huge bet on tomorrow paying off.
Right. So wrapping this up, we have Tesla at this really critical point, pushing ahead with these ambitious future technologies, robotaxis being the big one right now.
Yeah.
While its foundation, the EV business, is facing real headwinds. Competition, maybe softening demand. And the market, at least for now, seems laser-focused on that future story.
That's the tension, absolutely.
So it leaves us with a pretty big question, doesn't it? For you to think about. In this world that's so driven by innovation, by hunting for the next big growth story, how much can a promise about the future really overshadow challenges in the core business today?
Yeah, and what does this whole Tesla situation tell us about how much valuations are starting to rely on these, speculative, unproven ventures rather than the money coming in the door right now from established businesses?
It's definitely something to keep mulling over as we watch how this all unfolds.